Hey, good morning. This is Doug, realtor here in Utah. We've been talking about the market and the real estate market here, specifically here in Utah, and wanted to. I got what's behind me here from a friend of mine, Jaylyn Simons at Truly Title. Sent this to me, which I appreciate. But what it is, it's an example and a comparison. So let's look at it just for a minute, and what it's going to do is it's comparing last year to this year, and just kind of gives us a snapshot of really where things are at, so that we're not just guessing. Before I've told you that, well, this is my opinion and those types of things, which I definitely will do if it is my opinion. But this is mathematical. Run the numbers, change things if you want. Put the percentages in. It's a great feature. That being said, before we get into it, check out the blog here that's linked on the video. Check out the blog about next year's market. And anyway, let's just jump right into it for a second. So the first thing, and I'm going to kind of turn here a little bit so you can see. So the first thing you're going to see is we're going to take a list price of a $500,000 house and compare that this year to last year. So the second line there is the offer. The offer last year is going to be the 500,000 plus the way the market was last year is you had to come in over asking. So on a $500,000 house, it was not uncommon to see it be a $600,000 offer or $100,000 over asking, which that $100,000 was most of the time was not loanable, so it had to be cash and things of that nature. So it caused a lot of trouble. But so anyway, so the offer last year would have come in 100,000 over asking at 600,000. This year, that $500,000 house, the offer would be $500,000. Easy enough. Interest rates last year were 3.25, 3.125. For this example, we have it set at 6.125. Interest rates are a little higher than that, but that 6.125 is definitely something that can get bought down and into. So that's possible. But for this particular layout, we're at 6.125. So the next line item there is to bring to close. So on last year, you would have brought 166,000 cash to close so that's your 100,000 plus the down payment. This year, you'd bring the 67,000 that would be coming to close. Your monthly principal, interest, taxes, insurance would be last year was $3,300. This year you'd be at $4,100. So, and then your interest over a 10-year period from 2021, you'd be 130,000 and change. This year, because of the interest rate, you'd be at 255 and change. So, but let's take a look at the bottom line here at the bottom. So your total 10-year cost of this of this $500,000 house last year you would have been $401,000. This year at that 6.125 interest rate, you're going to be $395. So even though the interest rates have increased, there is significant benefit because we're not paying over asking at all levels, and so you're bringing less cash to close. And the big thing, like we talked about the other day, flat out, is the inventory. You have more to choose from. So now you can be in the city, in the school district, in the neighborhood that you want, for the most part, rather than having to be stuck buying the one house close to where you wanted to be, that maybe you needed a 4-bedroom 2-bath house and the only thing that was there was a 3-bedroom 1-bath house. Maybe you wanted a newer home and the only thing that was available was an older home in that area. So There are a lot of benefits, and the benefit of being able to buy the home today is still there. And it still is something you can do. You can always, you buy today. If you buy a house today and the interest rates change and drop next summer, you can always refinance. And then now you have both. You have the house you wanted and the interest rate. If things don't change and interest rates go up, you're in a good spot because you're not paying more for the interest rate. So today the market is good. I really look at things positively moving forward because I cannot tell you that inventory key is so important. Dealing with people that just tried to get a house when COVID and all that was crazy, it just was really tough. So give me a call, check out the blog below, give me a call. Let's see if we can't get you into a house today. Let's get you pre-approved with a mortgage person and let's get you taken care of. So give me a call. Thanks.